1 trillion, the dream. The dream that seems so far, but maybe not that far. That after AAP, this $1 trillion dream actually doesn't seem so unreachable. So will we actually reach that? What do you think?
Yeah, this is, a topic that I think has been popularized by Tom Nash, who, to his credit, is, probably the largest, most consistent YouTuber talking about Palantir. And I think he was probably the first to popularize the idea of a $1 trillion valuation. And so when I heard of that, 2020 or whatever, when I was seeing it, questions from others in the retail community, I sort of pushed it off as like Palantir, whatever, $25 billion market cap. Now it's, 50 or even more than that billion. Is like, even from our current levels, like a 20x, is that really a realistic expectation? The way I had always approached it, and I actually watched one of my previous videos on the subject, is I never dismissed it entirely. However, I was very clear that I don't think this is anything that's going to happen in the near term. And I think the reason for that is the government side of the business is not really going to see a 10x. And to get to $1 trillion valuation, you really need to have probably around $50 billion in revenue or so. And I think with Palantir, whatever it is, like north of 2 billion, you really need to see an explosion for that to happen. And so I sort of dismissed the government side of things and then looked at Foundry and said, okay, what is the growth doing? And the growth, that was sort of when we had that peak, that actually they timed it perfectly with the with the direct listing, where they had that intense burst of growth in the 40% range, and then from that point forward it had really dropped down, and it bottomed in, what was it, the low teens or so. And you can't get to $1 trillion valuation when you're growing 15% or even 20%. But the other point is, when 1 trillion,
Mhm.
right, is like, you have to define, of course you're not going to get the exact date, but you have to define, what do you mean by it's going to hit 1 trillion? Of course, it's a flashy target. It's great to discuss. It gets everyone excited. But when is it going to happen? And so my instinct was always, this is probably a 2040 proposition, certainly not next year
Mhm.
or within the next 5 years. But I think it's, more of a like a 15, 20-year stories to get to that $1 trillion valuation. And that was my way of dismissing things when I had initially thought of it. But I think AIP really changed the game in terms of the growth story of Palantir. And I say this, and people sort of are like, yeah, well, of course, but it's true. It's true because you want to have the commercial business, which is a much higher multiple. I know you've looked into some of the parts analysis. The government business does not get paid for as high as the commercial business does. And that's just a fact of the matter. And so I think my long-winded way of saying it is, the reality of 1 trillion has been drastically pulled forward with AIP compared to where I thought it previously could have been. And certainly that's my fault for not understanding that Palantir, had that capability internally. But the other piece of it is the industry drastically it
Mhm.
shifted. LLMs really took off in a way that nobody really saw coming. And so I think Palantir being able to capitalize on that moment has really, been very clear. And I was looking into some research that Dan Ives and Wedbush were doing about every $1 for every additional incremental $1 of spend on NVIDIA's H100, H200 GPU chips, there could be an additional $10 to $12 in spending across software, IT services, and infrastructure. And so this is crazy, right? And a few names they call out: Microsoft, Palantir, Salesforce, ServiceNow, Oracle, MongoDB, Elastic, Snowflake, Adobe. So, those are some of the names that you'd look towards the Palantir doing a Compco analysis from a relative valuation standpoint. But what I'm saying here is, for every $1 that goes in, with which is what Wedbush's research shows, for that to turn into $10 to $12 of additional spend, that's crazy in a way that's really never been shown before. And I think Palantir is very clearly positioned to take a good portion of that. It's not going to be anywhere close to all of it, but it's definitely going to be a good portion. And we're at the very beginning of the AIP S curve. I think AIP is question of whether or not AIP is priced in at all, we can get into that. But I think to get to 1 trillion, there are many different ways for them to get there. They could target small, medium-sized businesses and capture an incredible amount of them, or they could continue doing what they're doing, which is what they're so good at, which is large enterprises, and really build and deepen those contract sizes. And so when I run the numbers, it's like my mind is blown. Like if they're able to really open up their opportunity pipeline with AIP, and it's just a matter of like how far can their lead get with what they've developed and operationalizing these LLMs, like how useful is it? And that's why I think it's so important to follow the quarterly data points that we talked about, which is how are the boot camps going? First of all, how many are they doing? That's how many people they can get to show up. Secondly, how many are successful, which we don't really see. We don't really know how many are successful, but as you pointed out, how many they actually convert on, which we're going to increasingly see because they won't be able to hide it. They're going to want to brag about it on the quarterly calls, is how many new contracts are they getting? And then the fourth point is, do those contracts expand? Which is what Palantir is so good at, is that incremental spend going and moving throughout the organization, which is what they mastered with Foundry. And so certainly the NRR, the net dollar retention has cooled off. And I think AIP is just something that came out of nowhere, took me by surprise. And I would imagine if I were to put a date on it or a year on it, I think you really have to do that. Got into an argument with someone today about like $1 trillion is coming soon. Well, no, it isn't. but it depends on what you define soon as. So I wouldn't define 10 years as soon. But yeah, I would say if I had to put a year on it, 1 trillion, which is a 20x, which is an incredibly high, lofty target. Is it something that we should be, claiming as, those that have influence in the Palantir community? I wouldn't necessarily say it's a good thing. It's a great target. It's very lofty, but it's such a stretch goal at this point from where they currently are that it's more of a flashy target than anything else. And so would I say it comes before 2040? At this point, I would say yes, actually. I think we're gonna, it's very difficult to make a prediction at this point, but I would say mid to late 2030s is it's a real possibility. And the reason I say that is it's less about the 1 trillion and it's more about where Palantir currently is, and 50, 60, whatever billion-dollar market cap. That is so cheap compared to big tech, right? And if they think they're going to be, I know they say most important, most successful, most, vital software company in history, it's like those are all great claims, but they aren't actually a claim on the value of the company. But if they're going anywhere near where they say they're going, I think it's going to be such an incredible jump from where the valuation currently is that I really do think $50 billion is going to look cheap in the long run. And that's sort of where my head is at, alternating between the price to earnings ratio is ridiculous, but you really just have to suck it up and pay it if you think this stock is going to 10 to 15x. And so, yeah, I'd love to hear your thoughts on the subject.
This is obviously the dream, and once you have a sort of a dream, you can visualize, you have a sense of the goal. Like you are here to follow the story because there is a sort of end game. And empirically speaking, we know that at $1 trillion, that us who are in already from well below 50 billion, that would have a lot of impact financially for us. But that also tells us a hint of, okay, this is a story that we want to follow, and we want to follow the evolution. I'm personally intrigued more than when. I wonder how Palantir could actually reach that. How that happen is a matter of a combination of financial metrics. You mentioned 15, 20x on the revenues would make Palantir reach that target at around $60 billion revenues. So we need to think, okay, how achievable are these revenues? Do we have any comparable company that makes something closer? Well, we have, for instance, Salesforce, which is at a $20 billion revenue. And then we can compare, okay, is Salesforce truly more powerful than Palantir? Hell no. It's like they have one product, which apparently works very well. People are relatively happy, and which they were very, very good at scaling it globally. But Palantir can potentially become way bigger, in my opinion, for the fact that they are both a very horizontal and very vertical company. They can deploy something like as an archetype that works potentially for every company. So thinking things that help companies making the accounting, that is very horizontal. But Palantir can also do something that is extremely vertical, like helping Airbus manufacture planes more effectively. We know Palantir has been used more and more in the science field to make research. So very deep tech components in places where Palantir per se doesn't know anything, but they were able to build software so that people with subject matter expertise could really leverage the tech. So this is something Salesforce can't really do. They have the platforms to make analytics, but they don't provide solutions. They don't provide use cases for very specific business needs. So Palantir can do this, scale things completely horizontally, but also develop very vertical features. So this intrinsically makes Palantir extremely more powerful in nature than Salesforce, which has $20 billion sales. So this $65 billion target that is needed to reach the 1 trillion, I think is achievable. Very hard to get there. It takes a lot of time. If we consider that at 30% growth CAGR, it would take still 13 years to get there. We can have a sense that, okay, this means, as you mentioned, mid-2030, yet it's still 13 years. 13 years is easier said than done, especially with a very volatile stack. Sooner or later, right, there will be a bad narrative again, which will make us question everything. Also with Tesla, it happened. But I believe understanding the potential is way more interesting than really like masturbating ourselves with 2030, 2025, whatever, because it is more important to understand the potential of the company getting there in each moment in time. So as we mentioned, if we follow the story closely, we can have an intuition when Palantir is able to take that target and get it closer to the present. AAP, as you mentioned, take that target and moved it very fast. Because, for instance, maybe this 30% CAGR that is necessary to get $60 billion revenues in 13 years, maybe with AAP, these numbers will seem completely small, like a completely an underestimation. But in order to understand and re-update our mental models, we really need to get the small hints. So yeah, I love the idea of Palantir being able to gather. I would not pay too much attention into, 2030, 2033, because that is useless if we don't actually gather.
Right, but right. No, the reason, if I could just mention on that, the reason I say like pick a date is it gets people to say, like explain their reasoning a bit versus the whole, oh, it's $1 trillion company in 10 years or very soon or whatever. It's like, to your point, I want to hear why you think that. And to me, I think like when I work through the numbers and when I have done it, it's like you need to see such an increase. And you mentioned 30% CAGR is like, that is so difficult. And I'm not saying Palantir can't do it, but it's like you cannot fathom how difficult it is and how much further they have to go to get there. And so that's all I say with like pick a year is like you really have to back it up when you're making such an incredible claim like that.
It is more important the process that makes you think, okay, what are the conditions to actually get there? are the conditions in the world so far strong enough to get that boost? If not, what it must really happen? Because the unfortunate truth is that the companies who are actually able to reach a growth that is above 20% for more than 10 years is actually 3%. This chart tell us that, okay,
Wow.
you can grow 20% or even more in sales for 1 year. Okay, that's very likely. 70% of a company on the S&P 500 actually were able to do that. But once you start getting to 5 consecutive years of more than 20% growth, you start the percentage of companies able to get there is 11%. And this percentage decreases very dramatically. Essentially, if we say Palantir will get to 1 trillion by keep compounding at 30%, implicitly we say Palantir would be like the unique company in the S&P 500 being able to do that. So
Right,
this to
right.
say, I don't want to break the dreams, but we need to be aware that is like a mission impossible. Palantir loves impossible missions,
Yeah, yeah,
but
yeah.
the odds are truly against us. What this means is potentially Palantir could get to this goal sooner if the condition change, but normally, like in the probabilistic distribution, it is more likely that growth will gradually decelerate, and keeping that 20% CAGR for so long is actually very, very difficult. So
Yeah, and they're not even in the S&P yet.
exactly.
But you know, it's interesting, and this is a great graphic. Shout out to Maverick. I would love to know of those 3%, how many are software, right? Because you would imagine, you know, by industry, obviously it's difficult regardless of your industry, but the sustainability of it, I would imagine at least some of those are software companies. And so, yeah, I would be interested to know like a further breakdown, but that's a really interesting graphic about, as you're saying, the difficulty of sustaining that 20%, which we saw Palantir themselves struggled with that. And when the growth just kept decelerating and decelerating. And so, of course, they were continuing to grow, but over time it was getting harder until they're able to, you know, get out of the economic rut that they were in from a macro standpoint. But yeah, I love that graphic. That's great.
Let me speculate. Let me ask you a speculation. Let's say Palantir, let's jump in the future. Palantir is at 1 trillion. So we already reached this goal. How do you think the company would look like, both in terms of financial metrics, so key ratios like growth margins, and in terms of products? What do you like? What's your vision?
Yeah, what they would be doing at that point.
Mhm.
I think that's super interesting. And it also brings up like to get to the $1 trillion valuation, I think a, a part that you touched on before is like you have to imagine they have, you know, other products and other, you know, sources of profit that are unrecognizable to us at this point that contribute to that, as well as if they're still growing, you get that premium baked in. So it almost becomes easier if they get there faster, it's gonna really accelerate the direction of that. But to your question, I've never thought about this before, but I would imagine they're still growing. If let's say they get there with a 25% growth rate or something like that, that they're able to sustain. Let's say that sort of, you know, I don't know, the net dollar retention, I would imagine that is much higher. That is much more of a contributor than new client acquisition at
Mhm.
that point. I would think it's going to shift from what we have currently, and what I expect is it's going to be a lot more new logos that they're getting with AIP, and hopefully small to medium businesses that they're getting. And the net dollar retention has really stagnated. And I think that flips over time, and the back half of the growth is going to be driven by expanding within these organizations. So if I had to pick a growth number, I would say probably 20 to 15 heading down to
Mhm.
10%. Like at some point they're gonna hit a steady state. And so I would be blown away if it was still above 20%. And I would think, you know,
Mhm.
probably 15 would be incredible if they're still doing 15% growth 15 years from now. I mean, we, you know, whatever you would, or 10, even then.
They would have a lot of small, medium enterprises as clients at that point.
I think so. I think so. I
Okay.
think they were able to grow still so substantially with the, you know, the large enterprises, but at some point you've really marketed yourself to everyone you can, and you have to move downstream. And I think AIP, not right now, but I think it very much will be.
And the
And
consumer product?
the consumer product, you know, this is probably the easiest to speculate on. Is so much fun to speculate on. And yeah, it's just the consumer product. The thing with that is it seems like Palantir internally has no interest at this point in putting resources towards a consumer product. And so Alex Karp says, you know, tip of the iceberg with what they're showing us from what they're developing internally. But when you know, Chad's on X Twitter, Palantir engineer, and he's like, well, what would you even want a consumer product to do? And so like they're not, and he's like, he's so involved in AIP, and I personally feel like AIP could really be such an incredible offering for consumers. You think about all the data collected from, like, even if you log into Amazon, you're able to like download. I did this to like look at my spending, and you're able to download like literally everything, like when something was purchased, what it is, who it was bought from, like literally everything about the product, everything about how you actually purchase it, when it was delivered, like price and like everything like that. And you go across all of the different ways you interact with online services like Apple, you know, everything in the way that companies have since been required to open up those reports for download, and you feed it all into AIP. And there's so many things that you could really ask, I would imagine. Now, when people say that, and Chad commented when I was like, what should we talk about? He's like, oh, well, what would you want to see from products? And of course, I'm the last person you'd want to ask, because I have no idea, like, technical standpoint. But I think when you say consumer product, I feel like that vision has gotten a lot more clear with AIP. It's like there's so much data that you would want to harness from a consumer perspective, or even, you know, stepping past that, how could a consumer use AIP, not about their own data, but about, you know, leveraging LLMs? Like, how many ChatGPT subscriptions? Like, I have one, I'm sure you have one. Like, literally, this is taken off, and I feel like if you'd want to wrap that and take full advantage of it in a way that only AIP could, it seems so obvious to me. So to answer your question, yes or no, consumer product in 2035, I would have to imagine yes, but there are no indications this is a near-term endeavor.
On this, I personally think Palantir is not really interested into understanding consumers. At the end of the day, they even removed the gear shop.
Yeah.
So,
I got a
so with
sweatshirt
that, with that, they expressed not the intention to go to neither serve their most loyal shareholders.
Sure.
But
No, that's
I see very, very likely that there is demand, like there will be demand for what you say, but rather than Palantir pushing it directly, I see very likely someone wants to build something on top of AAP and Foundry to capture that. And I think the big value Palantir can provide in the next phase of AI is truly becoming the platform on top of which you build AI assistants. I think in the next years, we will see like a crazy amount of people trying to build the AI assistant for anything. It would be really good to see many of these companies actually powered by AAP. But let me ask you this, like we spoke about the growth rate, we spoke more about the composition of revenues, which could expand also to small, medium enterprises, maybe something closer to consumers, we will see. But what about the marginality? Like, I'm impressed so far that we have already reached 35% free cash flow margin, which if we go back to the earliest things Palantir shared, they had a long-term plan of reaching 35% free cash flow margin as a long-term target. we already get
Yeah.
that.
Yeah.
So, and now it's like, okay, let's see Palantir as a mature company, so not as a growth company. What could be the margin at full scale? So at 1 trillion, that
Right.
is a
Right.
mature company, similar to Microsoft and so on. What free cash flow margin do you expect?
Well, in terms of what I've seen from analysts in terms of, they only publish next 5 years really, but expectations for margins in the relative near term, I think, as you say, it's like they've done an incredible job. I think I the revenue is gonna grow and provide much more of a substantial impact to the bottom line than I believe margin expansion will. But let's just take it one by one. I think gross margin depends if you're looking GAAP or non-GAAP, but I wouldn't imagine more than, a few hundred basis point increase in their gross margin. I think they're definitely not going to be above 90%. I wouldn't think. I think maybe they're around 85%. So I think they're basically there in terms of gross margin. But the question is like in terms of their administrative expenses, their hiring, the thing is like it depends if they lean much more into sales or not. And so they've, Karp's had this sort of, I would say love hate, but it's really just hate relationship where like there has been like a flash of, oh, we're gonna like lean into sales if you listen to all the conference calls, and then like that just faded away. It's like they say they're not good at it, and I don't believe it's that they can't be good at it. I think it's just not a priority at all. So I don't know. It's a question of are they going to lean back into that? I would say no. Like I think it could be an increasingly large, definitely an increasing amount of what's driving their revenue. But to the question of like what are these margins going to do? I think SG&A overall is going to decrease, but I wouldn't say by that much. Like, I think I'm just looking at my numbers here. It looks like it was a 20% administrative expense in 2020, and now it's down to, I don't know, around 15. I wouldn't see it going below 10. Like, I think, again, like a few percentage points that they could get back, which is an incredible impact at a large scale. And R&D, the question is like, what are you doing with R&D in order to get there? And I would say it's like you really have to invest into the business. So at a minimum, I would expect them to really hold on to their R&D spend as a percentage of sales. So ultimately, I haven't really thought about what margins are going to look like in 10, 15 years, but I would say, I don't know, not past, I wouldn't think past 40, 45 or whatever. That would seem ridiculous to me. So at a minimum, if they're able to hold on to 35, I would be super happy because you have to pay for that growth somehow.
I think what Palantir is actually being able to do very recently is unlocking this idea of you pay for growth. That is why I'm asking you this question, because a bootcamp per se is something that I consider like cheating. In a normal condition, if you want to grow more, you spend more in marketing. What Palantir has been doing with bootcamps is you spend less in marketing rather than spending 7 months pilot. You spend a couple of days, so the cost shrunk to get revenues faster. That is like a cheat code. You spend less, you grow more, and we've been seeing like the result already, both in terms of revenue growth accelerating and also the margins expanding. So what I'm really struggling right now is to think, okay, now we are seeing this margin expansion. 35% is already like a tier one company. True, there is a stock-based compensation, but stock-based compensation is gradually declining as impact
Yep.
because
Yep.
they're not hiring too many people. They are making the best of it. So if we think of this like the state of art as it is, and we scale this structure, I think we can even get above 50% in potential. But it sounds
Potentially,
like,
potentially.
but it sounds so high. But I feel
It
like,
does. It
can
does.
I be that that confident in sharing these ideas? I would say I consider that a potentiality. Microsoft has a lot of margin, like I think above 40% right now. And Palantir, I think it can go there in that direction. I would not take as a certainty, but in the steady state, I would not be, oh, it can't be done, thinking of Palantir as a 30% net profit margin as on a GAAP basis. But if we include also the stock-based compensation, having like 40% non-GAAP, meaning that
sounds better.
operatively speaking, in terms of free cash flow, we are at around 40. Then you have stock-based compensation that now impacts like 15%, 17% revenue. Then that with scale, it gradually reduces. It will probably always be relatively high compared with a railroad company, but the impact to gradually converge more to a 10%. I think this is something that, in my eyes, sound reasonable, I hope.
Well, I would say, 50%. I think they're going to be paying for the growth somewhere. I would not say, again, to your point, never say never, but 50%, it's just one of those things that competition is going to feast on that 50%. They do everything they can to take it away. It's just, capitalism. 50%, I would never expect that. I wouldn't even put it in a bull case, right? I think maintaining their margins currently, as you said, and scaling that up, that would be a base case, right? But could they add another 15% to the 35? I wouldn't think so.
Let's make a thought experiment.
Sure.
What Palantir needs to spend on in order to keep growing while keeping the same margins?
Yeah, you're gonna call me out on this?
No, but it's something I never thought about. So I'm thinking, wait a second, are we missing something?
What do they need to actually spend on to facilitate that growth?
I mean, let's say you're karp and you need to grow while preserving margins. Because you always have the option to, okay, let's go full advertising.
They're going to really be hiring a lot, and they're going to always be an engineering first culture. I would imagine, and it's going to depend how they do the accounting on it, but I think gross margin is going to be pretty flat. I don't think they're going to be able to expand the gross margin very much. I think they're happy
margin,
with.
I agree with you. Like,
yeah. Okay. So the
above
question is
85%, it would be already very, very hard because at the end of the day, AWS wants to be paid.
Right. So so the question is, like, on the accounting side of things, you think about doing all of these boot camps, it's not free, but as you say, it's a very greatly reduced cost to traditional marketing of some kind. So I'm totally with you there. But there are some costs, and if they're doing so many of these, the talent and the engineering, manpower required is going to increase. And I also I'm not sure if you saw a video, I think I put it out today, on what Alex from ticker symbol U was saying about they could potentially certify third-party organizations to actually do some of these boot camps for them, because at some point, as great as the conversion rate is on these boot camps, and as successful as they are, they're going to want to scale it further. And so just like they have a developer program for getting a certification on Foundry, if they're able to certify third parties to run these boot camps, they're going to do that. And there's going to be a cost associated with it. And that's going to, take a bite out of what they're getting. It's not going to be substantial, I wouldn't imagine, but it's going to be a cost worth paying, because they're at some point going to need to move beyond what they're able to do internally. So, and the other piece of it is, like, are they going to spend more on R&D? I wouldn't put that out of the question. You could see R&D sort of hockey stick a bit, because we've talked about a lot so far. It's like, what are they going to be doing next? And as the story continues to develop, sure, you're going to be as capital efficient as possible, but those are just a few of the things that I think of with respect to why margins wouldn't, double, for instance.
That, for instance, here on this side, I personally think Palantir will not have any spike up on the expenses. I think this R&D part is actually where Palantir will create the real differential compared with other companies. I don't know if you ever seen the comparison of research and development among the big tech. They have a relatively high R&D spending, like 5-10%. But then there is Apple, which has an R&D which is so small. It's like impetuous. Like it's funny to look how small Apple spends in R&D, and I think Palantir will seek to squeeze that, because R&D is where truly is not the number of people, contrary to what Snowflake thinks, but is truly having the right people. In an interview, Karp said, it's not about having more engineers, it's having that one single person in the world. It can pay, like you need to spend a lot to get that person, but the potential ripple effect that can have are potentially very. Let me show you this chart, like to sustain this point. I personally like the comparison between the R&D expenses compared, like Palantir versus ServiceNow and versus Snowflake. And you see, Palantir now is spending 18% of R&D compared with revenues, with R&D at an absolute level staying very flat. But ServiceNow, which is so far the best B2B subscription company, doesn't have this dynamic. Like they need to keep spending more and more as they grow. And then you have Snowflake going completely bananas with R&D, which now is 50% of revenues. And that's the big dilemma I have. It's like Snowflake is currently spending 3x the R&D of Palantir, but I think no one can really argue that Snowflake is innovating 3x more. So I personally think like the key lever to get to huge, insane marginality is on R&D. But who knows?
Yeah, that's very interesting. I would imagine the 18% or whatever, at some point that's going to, in my opinion, I think it's going to increase, not because it has to, but because they want to sustain their advantage. And in order to do so, I believe, if their other expenses are coming down, I think they're going to funnel some of that into reinvesting in new technologies. And that's just my opinion. Like I totally see what you're saying. It's like there's so much more capital efficient, I guess you could say, compared to competitors. But I don't know. I mean, it's yet to be seen. I would imagine that flat line is gonna do something at some point. They're so well managed internally about hitting targets, as far as I can tell, which is why they always beat by like 1 cent or something like that on EPS. That I wouldn't be surprised if this continues a bit longer. But I think just as much as they talk about, being ahead of the competition, I think they see the opportunity ahead of where they are, and I think they're going to try and seize it. And whether that's an increase of a little bit in R&D, so be it. But if it stays flat, that's great.
Well, this is you see, it's nice to have like a divergent view, because that I think that would make us more captive into the changes. You see R&D to essentially grow up as the company grows. I'm more toward probably they want to keep like these R&D at the very, very, very minimum.
Yeah.
So that they
I see what you're
leverage
saying.
more the soft, like the tech side, which means, like in my opinion, is like, okay, but like all the expenses will be like on getting a headquarters and marketing and on R&D with code. Well, that's an interesting dynamic.
To be clear, I think it's like a more of like a 5-10 year scenario. I don't think immediately we're going to see R&D spike and lower profits. I just think if they are doing what they say they're doing, I think I would be surprised if R&D goes down is how I'd put it, and that's what I have really in my numbers essentially. So that's just one reason why it might not go to 50%, free cash flow. It's basically what I'm thinking.
Well, I think we can agree, like if we make one step back, is Palantir already at full potential?
No.
Okay. So I think we both agree on there is some further upside. Here I'm not talking much about the growth side, but more in terms of how efficient the company could be. And like once we know there is a potential room for expansion, we know that the management can actually move that lever. I think what we really don't want to be is in a situation like Tesla in 2021, when people were seeing a huge marginality. But the problem was that that marginality was like peak marginality coming from all the like all the possible positive things that could happen actually were happening in terms of high demand, like a capped production, high prices, general hype, low interest rates. So that artificially created some margins that were like, okay, with all the potential
Right, right.
conditions, we get there. I think with Palantir right now, like if you have to rate, just to have an intuition, on a scale of 10, 10 being like Palantir at full max marginality. Right now, this 35%, where would you rate into this scale?
It's tough because my thought process is it's less about the margins and it's more about like revenue growth, which funnels down to the
Mhm.
bottom line. And so it's going to the revenue growth is what I see as the driver. It's going to flow through the margin. So in
Mhm.
my opinion, like we're on the topic of $1 trillion, do their margins need to double to become $1 trillion company? Certainly make it easier. Is it required? No, no, definitely not. And so you're saying it's like how far along their margin trajectory are they? I would go as far as to say that they might be like a 7. Like their margins, it's I think you compare them to other software companies mature. I don't know what Microsoft is, but it's probably around 35. Like it's not going to be much higher than that. And we're thinking like steady state is like 10, 15 years out. Where are they going to be? I find it very hard to believe it would be, above 45, but that's just my opinion. It might
No,
might make some people upset.
How come you don't have like a 7% free cash flow margin?
Right, right.
No, but I agree. Like I try to be conservative, but I like to experiment with thoughts. Okay, what could be the potential where we actually are? Are we using all the levers that are potentially there? But sorry, I would like to ask you something that we mentioned previously. Like when you see Palantir having now all these products, is there a product that where you think, oh, I would love them to actually have this product?
You're talking about like something that they don't already have
Mm-hmm.
that they should adopt. I don't know. That's not really something I've ever thought of before. And I'm not technical in a way that I can sort of diagnose when they talk about, when they, I'm thinking back to like FoundryCon or even when they're doing their original demo day. Like I'm not inside an organization looking for a tool that Palantir has. I'm just able to, synthesize what people say about the product, how useful it is. So I don't know. I'd have to actually give that some more thought about like what they're really missing from a product perspective. But that's really what I love about their culture is like they build and that's
Mm-hmm.
what they're focused on. And so if there is a gap in their offering, I think it's going to get closed very quickly. So unfortunately, I don't have a good answer to that. But yeah, I mean, I wouldn't be too concerned about them, really missing out on something. And love to hear if you know exactly what they're missing. I'm sure they would love to know.
No, Chad asked you what product do you think we are missing? And I
Right,
started thinking,
right.
well, what like the intrinsic question to that answer is what client they would need to acquire in order to have like the perfect offering. And I
Sure.
personally, it's like now long time I'm thinking of Berkshire Hathaway. I like that is already a $1 trillion behemoth, okay? But that is comprised of 85, 86 legacy companies. So I keep thinking, how come Palantir is not empowering all of them? And in order to empower all of them and actually extract the best value, what Palantir could actually do. On the other side, if we invert it, is okay, let's say I'm Warren Buffett. What information, what value can I actually extract from this conglomerate? And I personally think they could develop something like a foundry for holdings. Because if we think 86 companies, all of them will have their own SaaS providers. So if we map for each company, all the SaaS companies that are developed, so they're providing for that company, it means that Berkshire Hathaway deals with N86 software providers at all. And Palantir potentially could replace a lot of them. So since Buffett is very savvy, imagine you have like a map of all the software that is deployed on all the 86 companies, and visualize, okay, this is exactly what we spend on all of them. And for all of them, is like, let's see how much it would cost if we replace this stuff we pay for with something that is built on Palantir. Like that's a wild dream
Yeah, that would be crazy.
I was having. Because imagine once you have these many companies, it's like when you have a portfolio of 80 stocks, and what you really want to know is, okay, what are the true risks I'm exposed for? What are the synergies that I could potentially, well, in terms of portfolios, we don't really see that. But since you are a business owner, you would want to unlock synergies between the operating companies so that you can really optimize everything. So far, we have seen Palantir being vertical into optimizing solutions for a certain industry, a certain kind of client. But I would think there could be some space into doing something like at a very high level to give like the complete overview of the state of art of the software when you have like very different organizations that are very different between each other and have like this huge substrate of useless softwares that could be substituted if done in Palantir.
Yeah,
Does
that's
it make any
fascinating.
sense?
It does make sense. It does. I don't know how many, enterprises would actually need something like that, but it's certainly fascinating, and certainly missing, I would say, unless I'm missing something about it already being in the offering, which I don't think it is. So it's definitely an interesting recommendation. We'll have to see what Chad thinks about it. But yeah, I mean, that's a good answer, I would say.
So we have discussed about the $1 trillion dream, how Palantir could get to this 1 trillion, how long it would take, and even more importantly, in my opinion, how Palantir would look like. This to stimulate our brains into thinking what's the current state of art, what Palantir could do better, because Palantir is improving fast, yet it seems Palantir is not exploiting the full potential yet. And we have seen that in terms of growth, we have seen that in terms of margins, but there could be some new updates, new products that could change completely, as AAP has done. So, guys, when do you think Palantir could get to this dream? But I would be even more curious how Palantir would look like at this $1 trillion market cap, which would put Palantir essentially in the same league of the Big thanks.
It was a great discussion, Arnie. I really love the topic of what are margins going to look like, and it's great that we have different opinions on that, and I'd love to see the comments on this video, what everyone is saying about how Palantir gets there, because it's not something I'd really verbalized before, so really love the discussion. Thanks for having me on. We'll have to do it again sometime soon.